Yo, what up, YouTube? It's Mr.BuyTheDip back here with another video. It's been a couple days. I'm just trying to, settle in, get ready for the new year. But let me tell you guys something, okay? I know it's been weird weeks, Christmas, the holidays, but I need you to realize some assets are still on my list and on my radar, okay? One of the stocks I'm going to talk about that you cannot miss is Amazon. Okay, so guys, when I talk about certain stocks, I'll look at how their competitors are performing. Okay, Amazon has been a sleeper this year. Look at the year to date. Okay, I want you to look at the year to date, and here's what I did. I was like, okay, let me compare it to Google. Let me compare it to Nvidia. Let me compare it to Meta, right? And really, to be fair, I think it was Google's year this year, because if you look at the year to date to Google, at one time, this was up 70%, and this has ripped this year. This is a straight uptrend, right? This stock was trading at $159 at one point this year. At the peak, it was at $320. Okay, so keep that in mind. Okay, same with Nvidia, right? Nvidia ripped, but when I think about a sleeper, right, it's going to be Amazon, and I really like Amazon at about 225, right? I love that level. Okay, now why do I love that level? What is some of the growth? What is the story behind Amazon, right? So cloud and AI tailwinds. First of all, AI is dominating every other market move, but I want you to realize what Amazon has: AWS. Okay, so it's a major profit engine. So when I talk about Meta, right, I'm like, what is something that's bringing in a lot of revenue, money from Meta? And I would say, oh, the ads are. Okay, with Amazon, it is something called AWS. Okay, AWS is Amazon Web Services. It's services for people with companies that have apps. Amazon provides services for those apps. Okay, now there's strong corporate demand for AI in infrastructure and services. So the growth here is a long-term driver. I want you to look at Amazon since let's say about 2019. 2021, we see that peak, then a drop off. Do not think you have missed the run, missed the boat. Guys, I'm going to buy this under 225. Okay? But is it going to be a big position? Nah, right? It's going to be a smaller position as we go lower to 215, 213, 212. I like Amazon there even more. If the market weakens, Amazon is going to drop even more. Look at the start of this year, right? 237 start of this year, okay? And then we go all the way down to about $167. I remember seeing Amazon at these levels, okay? So when I'm thinking about, hey, if the market goes down, is Amazon going to go down? I think definitely, right? Because Amazon is a stock. When the stock market is in fear, is in uncertainty, people are going to start to sell Amazon, okay? But where do I see the stock going long term? Let me talk to you guys about that, okay? So for a stock to be a good pick long term, we got to talk about their major profit component, right? Which is AWS. Cool. Now, the revenue growth. Amazon's revenue continues to expand year over year. Remember, revenue is like how much money is flowing through the company, right? How much are you doing in revenue means the total sales, total money you're bringing in. If that is growing, that means the company is still growing. Keep that in mind, okay? So Amazon revenue continues to expand year over year with strong growth across e-commerce, ads, and cloud. Simple. E-commerce, ads, cloud. Simple. These big three is what's going to drive Amazon to $295 to $300 a share. That's an 80-point jump if I get in at 220. I want you to visualize that. I want you to put some numbers in your calculator. I want you to see how many shares you can acquire. Okay. Now, analyst trackers a strong buy with the 12-month price well above current levels. Okay. The analysts are going to raise prices, drop prices. If analysts had a price target of 250, guess where my target will still be? 300. Okay. Because when you buy shares, the good thing is, guys, you can hold this forever. right? And in the long term, I see Amazon as a great company. By 2030, it's a great company. By 2035, it's a great company, okay? PE ratio is about 32. PE ratio is 32. Market cap is huge. Look at the 52-week high, 52-week low. If you want to get in at 220, 225, that's a decent buy, right? It's not the greatest, but you cannot wait for the perfect market drop. I mean, you can dollar cost average in, which is something I'm going to do. If we get a bigger drop, I can go ahead and buy more shares, more amount of money. For example, when we go to about right here, look at this. So I really like this level of about 222. I like 220 on this. But I want you to look at this level. Like, I'm going to buy probably $200, $300 worth, okay? As we go lower, I'm going to start chipping away. Remember, 50, 60, 80. Same thing I'm doing with Netflix, okay? Look at the way I'm buying Netflix, okay? So my average cost is 98, right? But this is a longer hold, right? But if you look at the way I was buying Netflix, my history is going to show you exactly what I'm going to do with Amazon, okay? You cannot go wrong with buying a good asset at a fair price, okay? So if you look at my history of how I've bought Netflix, right? Look at this. Every week, $10, $10, 10, 10, 20, 50, 30, right? And then some of those big buys are, mixed in there. But I want you to know that if you want to be a good investor, you got to think about the long term. And in the long term, Amazon is a buy. It's a great company. Thank you guys for watching. Like and subscribe. Keep this on your radar.